Okay, good morning, everyone. We'll go ahead and officially get started with today's business boot camp. We will follow up with our new member orientation at 11 today, so stay tuned for that. If you'd like to stick around, just make sure you join us after this presentation. Today we'll talk about Business Banking 101, none other than our friends at Comerica Bank will go ahead and present um, today's presentation. But before then, I'll go ahead and just go over some really brief housekeeping rules. Just make sure your mics are muted. We also suggest turning off your video if you have any distracting video. If not, it's totally fine. Also, make sure you use the chat feature for any questions. We'll be allotting some time at the end of the webinar, close to the end, for any questions that you may have. We'll answer those. And just a little reminder, you will receive the entire recording of this presentation in our post-event email and survey. So make sure you be on the lookout for that. And as we begin as well, just include your contact information in the chat box. It's a nice little way to network nowadays that everyone is tuning in virtually. So with that, I would like to now introduce our contact with Comerica Bank, Mr. Steve Richens, who just joined the line. I am seeing him here. I'll stop sharing my screen. And Steve, if you want to give some brief remarks, we'd really appreciate it. Thank you.
Thank you, Elizabeth, and sorry for the technical issues I had getting in, but excited to be here now. We have here at Comerica Bank have had a chance to work very closely with the Arizona Hispanic Chamber of Commerce now for several years. It's been a legacy that I inherited when I became the Arizona market president, and am very proud of the work that we do with the Arizona Hispanic Chamber. They truly are champions for business, and specifically Hispanic businesses in the community. A little personal information on mine: the Hispanic community is near and dear to my heart. I lived in Latin America for a few years and worked there for several. So I am a big proponent of the Hispanic opportunities here in Arizona. Here at Comerica Bank, just a little background on us. Here in the Valley, we have 17 banking centers and one corporate office scattered across Maricopa County, with over 100 employees here serving the communities in which we live. During the pandemic, Comerica Bank was able to help small business by participating in the PPP program and helping over 4,000 businesses receive the needed funds to keep their businesses going. The vast majority of those were loans of less than $100,000 to small business. And we've also been able to partner with different groups and make sure that funds are going to those businesses in need, including partnering with the Hispanic Chamber of Commerce and helping a few small businesses here in the Valley with much needed funds to keep their operations going. The topic today, I think, is timely for those of you who are looking to grow your business and looking to access capital to be able to do that. And we have Sergio and Veronica that are going to do just a fantastic job of giving that overview of what you need to look for in a banking partner, how to go about becoming bankable and lendable, so that when it is time to get that loan to grow your business, you're in the best position to do that. So with that, I will turn this over to Sergio to start us off.
Absolutely. Thank you, Steve. Appreciate the words, and look forward to working with you guys in the future. Good morning. My name is Sergio Cardenas. I'm a commercial banking vice president for Comerica Bank here in the Phoenix market. Also on the board of directors for the Hispanic Chamber of Commerce. Like to say thank you for joining us this morning. We really do appreciate you being a part of the organization, and if there's any other things or other organizations that you think would be beneficial to the Hispanic Chamber of Commerce, we'd love that you would share the word and would like for them to be a part of the Hispanic Chamber. So like I said, thank you today. The Arizona Hispanic Chamber of Commerce Banking 101 is what we're going to go over this morning. It's going to be myself and my colleague Veronica, and then Pam McConaughey has also joined us in regards to the topic that we're going to cover today. Hopefully you will enjoy the topic and get a better understanding of what business banking is all about. Please feel free to ask questions at the end. As stated before, if you want to go ahead and put it in the dialogue, you can go ahead and do that. If you want to go ahead and put the display on for the presentation, please.
Could everyone see my, yeah, could everyone see my screen?
I can see it.
No, it's just me.
It might be your view, Sergio, but yeah, it is up.
Okay.
Oh, Sergio, go
I've got my own presentation up. No, that's fine.
Okay.
It always helps to see it visually. So, so the topics that we're going to go over that we put together is what is business banking and why is it important for your business? Preparing your business for success, what it takes to a business loan, and how to present your business to a bank, getting the proper advocates for your business, how a business banking relationship can help grow a business, and then business banking solutions, growth, cash, wealth, risk, and what a business banking relationship should look like. So if you want to go to the next one. What is business banking? Why is it important for your business? It is important to have a great relationship with your bank, especially if you want your business to grow over time. Now, what do I mean by this? You want to align with a bank that can understand your business, industry, products, services that you provide. By understanding your business, this bank can support your business and help your growth strategy with access to capital. Supporting that growth would be through lines of credits, equipment loans, real estate financing of a building your business will be occupying for office or manufacturing needs. Access to capital is a key when it comes to starting a business or having one that is already established. The vast majority of entrepreneurs need financing to assist with these startup costs and to grow their business. So there's some information that I read that shows that only 5 to 10% of businesses that have paid their employees do not need financing. So what does that mean? 90 to 95% of entrepreneurs need some form of capital in order for them to operate their business. So it's important to have a banking relationship that you can form a relationship with, that you can establish a banking account with, and that you can continue to work with as you continue to grow your business. So preparing your business for success, if you want to go ahead and move to the next slide. Legal entity setup. So it is really important to set your business up with the right legal entity. And it's important that you go to a CPA or tax attorney or somebody who has some sort of knowledge of legal entity setup, because I understand sometimes when you're starting your business, you don't always have the ability to pay a CPA or an attorney or anything like that. But at least seek somebody who may be knowledgeable about setting up a business. This is a key when establishing business or already have a business in place. At the end of the day, you want to make sure that you have sufficient amount of profits to reinvest your company instead of having to give it away in taxes. So if you don't set up your business right at the front end, then you could be paying more taxes than you need to be. That is very important in establishing your business, or if you already have a business set up. The next thing would be establishing a bank account. You want to establish a bank account for each of the entities if you have multiple businesses. Don't use a personal account, as it defeats the purpose of having that legal entity set up. And some things that I guess you could say attorneys talk about, even bankers or people in the industry talk about, is called piercing the corporate veil. So piercing the corporate veil refers to a situation in which the courts put aside limited liability and hold the corporation's shareholders or directors personally liable for the corporation. And what you don't want to do is allow, God forbid, somebody to sue you, not only get your business assets, but also get your personal assets. And that's the whole point of setting up a legal entity, so that you're separating your personal and your business. And so it's very important that you have your transactions separate. You keep your business transactions separate from your personal transactions in regards to that. And again, like I said, this is part of preparing your business for success. Next slide, please. Budget. So go back to the other slide, please. So creating a budget. So I've noticed throughout my experience over the 15 years that I've been doing banking, that even some good companies haven't created a budget. Now, why do you want to create a budget? A budget is good for forecasting what you're going to do for the year. Whether it's your sales volume, it's your fixed costs, your expenses that you think that you're going to have during the year, based off of, like, for example, let's just say you have your rent, you have your cost of your goods or your services that you're providing, whether it's internet services, whether it's telephone services, or whether it's a product that you manufacture. You know approximately what you're going to have during that year, and if you've had your business established, you're able to see, okay, during months through October through December, because I sell a lot online, like Amazon does, that I can forecast, okay, I need to make sure that I have this much inventory at this time, so that when it comes this time, I can sell all this product. But if you don't have a forecast, sometimes you're not budgeting the right way. You can't understand where your shortfalls are. It's a very good planning tool when it comes to creating a budget, even for a business that's even starting up. And I apologize if you're hearing little kids in the background. I've got 3 little ones, and they're doing homeschooling or online schooling. And so I apologize if you hear that in the background. Anyways, so like I said, it's a good tool when it comes to creating a budget, having a budget for your business, and making sure that you can forecast for the year. Not only that, but banks actually look for that kind of information, especially when when you're getting a loan. Next one. So bookkeeping. One of the things that I've noticed, like I said, over the 15 years that I've been doing this, is it's important to have good bookkeeping. Even though you may have an accountant look over your books or do a review, audit, whatever it may be, it's good to have the right person doing the bookkeeping or software to keep track of your business finances. For companies, there are several software solutions that fit each size of business, and those software actually have support for that software that you can work with. You can also work with an accountant or company that provides bookkeeping services. You know, how much is in the bank isn't always the best determining factor of how well you're doing. You know, it's good to see that you have good balances in the bank, but you could be missing out on good opportunities and not understanding what your cash flow is. You can track sales through your bookkeeping, your expenses, understand margins, your costs that are affecting you. Seeing how good your financials are is a good key to understand, understand your business. And it also helps when it comes to, again, that banking relationship that you establish or that you have with your bank. Like I said, track the sales, cash versus accrual. Cash versus accrual. So, and I'm not an accountant. That there might be some accountants on this call today, and they could probably explain it a little bit better than me. It's okay to have cash statements, but accrual actually recognizes revenue when cash is received and expenses are recorded. Cash basis is recognizing the revenue when cash is received and expenses are recorded when cash is paid. Accrual is where you recognize revenue when it's earned and expenses are recognized when they're incurred. The main difference between accrual versus cash lies in the timing of revenue and the expenses when they're recognized. And the cash method is a simple method, which is fine when you're starting your business, but eventually what you want to do is move to the accrual method. And obviously, like I said, I'm not a CPA, but there may be some CPAs on here. Most organizations or even smaller organizations find it better to have accrual statements because it gives a better understanding of what your true revenues are and what your true payables are. And I mean by this, your expenses that you're going to incur in, for example, say a light bill, or you have other bills coming up for the month. Well, it's going to account for that in terms of payables that are coming due for that month, and what revenue you've earned in terms of the amount of funds that you've got coming in. So it gives a better picture and a better understanding and profitability for your company. So those are just some of the things, like I said, for preparing your business for success. Know your competition. Next slide, please. Know your competition. It's always good to know what companies provide the same products that you do and how you're different. It's important to advertise your expertise and your competitive advantage over your competition. Know your customer base. Who is your target market and how can you increase it? Are you selling your services to an older demographic or a younger demographic? What price point makes sense for your product so that you can sell more of your product to that specific demographic? Brand awareness. Good examples of brand awareness are Tesla, Apple, Google, Amazon. Each of these brands are known for the experience that the customer has with their product or service that they provide. Tesla is a disruptor of the conventional car market. They changed the way that people view cars and their driving experience. 2012 was when they first came out with their Model S, a company or a product they actually developed themselves. And now look at today. They're selling well over hundreds of thousands of cars, a year. And it's actually changing where other big organizations such as GM, Chrysler, Toyota, all these other companies are now focused on electric cars because they created that market. Look at Apple. They came out with the iPhone in 2007. Think about it. 13 years ago, we had the first iPhone where you're able to, instead of having a keypad, you can touch the screen of your phone and you can get to wherever you wanted to on your device. Now we can't live without them. Amazon was started as an online bookstore. Now it's a behemoth that's competing against all the retails of the world. and it's changed the way that we do our consumer shopping. So brand awareness is key to your organization when it comes to preparing your organization for success. How can you create your brand? How can you do things that are different that can make you stand out, in other words? Have a growth mindset. Challenges in your business are opportunities for growth rather than something that can where you say, well, this is too hard. I don't want to continue. Having that desire of saying, I want to learn new things. I'm eager to take risks rather than, I'll stick to what I know. Either I'm good at it or not. That's not a growth mindset for skills. Is this really my best work? What else can I improve on? Rather than saying, it's fine the way it is, there's nothing to change. Having effort. I know this will help me, even though it is difficult, I know I can do better. Rather than saying, this is a waste of time, there's not a lot to figure out, I don't want to do this anymore. Setbacks. When you have a setback, I'll use another strategy. My mistakes help me learn, rather than saying, oh, it's easier to give up, I'm not too smart. And then in terms of getting feedback from your customers or from other organizations, maybe it's your supplier, maybe it's somebody you've been working with for quite some time and you get some negative feedback. Well, what are you going to do about that feedback? Do you recognize your weaknesses and then see how to fix them? Or do you say, no, maybe I failed, and then understanding your talent, right? I wonder how, or understanding how other organizations are talented. Like I mentioned, Tesla, Amazon, Apple, what are they doing that you can replicate? What is part of their business model that you can replicate in order to make your business more successful? In that sense, rather than, well, they've done it and I don't know how to do it, and so I'm just going to do something else. No, it's good to replicate somebody who's already doing it. Okay, next slide.
Sergio, before we go on to the next slide, I do see a question here. Do banks prefer to see a cash or accrual statements for small businesses?
It's better to see accrual statements. Again, it allows to see a full in-depth picture. And Steve, maybe you can add to this if you're still on, or Pam. But accrual statements give a better picture of a business rather than cash statements, because we're not able to see your accounts receivable on a cash-based statement or your accounts payable on a cash-based statement. A cash-based statement is when cash is received and when cash is. So you're not going to have an accounts payable account receivable on that statement. So we don't see the full picture in terms of your profitability of your organization. So yes, accrual is better. We accept cash, but accrual is better for us when we look at the financial statements. Did that answer the question? Anybody else want to give color to that?
Hi, Sergio. It's Pam. That was an explanation, and you were right. That is exactly how we would prefer to see the statements.
Perfect. Thank you.
Perfect. What it takes to get business loans. And Pam, maybe you can jump in here too in regards to some of the stuff that we go over and what you collect. But one of the things is a good personal credit. It's good to have personal credit. You want to make sure that banks want to make sure that even though you have you know, business accounts and good performance, but you know, how you run your personal finances is also an indicator of how you're going to run your business. If you can't manage your personal finances, then how can the bank trust you with your business finances? And so it is important that you do have good credit, and if you don't have good credit at this time, that you you know, do steps, that you take steps in order to get your personal credit in line. You know, maybe there's certain things that you can do, you know, in regards to seeing how your credit score is, you know, as of today. Veronica, there's some tools that they can use that maybe you want to mention?
Yeah, that's actually a really good point. Good morning, everybody. I think that understanding or knowing where your credit score is very important, especially right now. A lot of times we will work with a client and, you know, they think that they know that their credit score is this, but if you can go to Experian, Equifax, TransUnion, any one of those websites and put in your information and see your credit report, you will have a better understanding rather than having like a guesstimate. Because the one thing is that if you're looking to apply, you get all your stuff ready and then we go and submit an application. Next thing you know, you've fallen short. Maybe there was something that you missed and now we're below the number. That number, although sometimes there may be exceptions that can be made, just make it a little bit more difficult to get things done. But if we know where you're at, we know that you maybe need to work on that credit, we can help you with, you know, pay off something, you know, pay off one of your high credit card balances, you know, bring that balance down to where you're more of a 60-40 or 70-30 type of a balance. But I think that's the part where if you currently have a credit card, whether with us, you know, Bank of America, one of the other banks, a lot of them have the option for you to go to kind of like a credit journey. It's either linked to an Experian, and right there alone with the current credit card that you have, you can kind of see what a credit score is that you have. But then if you actually go, like I said, to the other websites, Experian, Equifax, TransUnion, the actual credit bureaus, those will also give you a better idea so you're aware of where you're at. And then if you're in the good spot, then great, we can kind of keep moving forward. But if there's some work to be done, then what are the next steps? And that's where we can step in and help you with what we can do to work on that. And sometimes we might just have to wait a little bit, 3 to 6 months, work on making those payments and bringing that balance down. And we can probably work on that loan or the next step with you once you meet those qualifications.
Sergio, this is Pam. May I add a little bit?
Yeah, absolutely.
Thank you. Also, getting a business loan isn't just waking up one morning and saying, oh, I want to run to the bank and I want to get a loan. It really is a thought process that can be anywhere 1 to 2 years out. And what I'm referring to is, as you're working with your CPA, you need to keep in mind that the way that a banker will look at your tax returns is very different than the way sometimes your CPA or you might think, hey, how do I want to get away with showing that I've made as little as possible, taking advantage as many deductions as possible. And at the end of the day, when a banker looks at your tax returns, we see a business that perhaps was very strong and doing really, really well, but your bottom line doesn't show that because you've taken advantage of so many of the tax laws. So work with your CPA and your banker as a team to say, okay, here's what I'm projecting in the next couple of years. What do I have to do to look my most presentable to my banker? And that's food for thought also.
Thank you, Pam. Appreciate those comments, and that is true. It is important to make sure that your accountant does know what you're trying to accomplish, because they're looking at it from a different perspective. And it's always good to make sure that you have, again, as we've been talking about, your banker helping you in that aspect, and making sure that you do talk to your accountant and make sure that they're understanding what you're trying to accomplish either in the next year or two. The accuracy of your financial statements, your business financial statements, is key to understanding your organization for how your company makes money, key areas where you may need to improve, and also when it comes to questions that your bank may have about your financials, that you understand, your financials in itself. This gives the bank confidence in that you understand your business and your finances, and the accuracy is key to that. If we see clear mistakes in your financials in terms of the bank, talking from a banker's perspective, if we see clear mistakes in your financials, then that doesn't help us feel comfortable for how accurate and how valid those financial statements are. And it may also affect the way that your loan can get approved or not. And then also, in addition to that, telling the story. Telling the story is very important when it comes to the bank understanding your business. How did you build your business for success from where you are today? Or how are you going to build your business if you haven't started your business and you're looking to start your business? Banks always want to know what it drives you every day to do the best that you are doing in your business to keep it going for the future. We want to make sure it's a going concern. How you're profitable. So understanding how you make your profit. Knowing exactly how your business makes money. If you don't know, your costs, and your costs are good, your overhead costs or anything like that, then, how can you understand your margins and how can you grow your business to be successful? So those are some of the things when it comes to telling the story. You want to know your business in and out. You want to understand that. And even if you've stepped away, let's just say you have somebody else managing your day-to-day operations, and there's nothing wrong with that. There's nothing wrong to have, levels of management in there, but to be in the know, to understand what's going on with your employees, your costs, if there's overrun or may be, it's very important to understand all those things. And it's great to have also employees that understand that. So larger organizations, sometimes there's a specific person who's focusing just on sales growth. Some of them are just focusing on employees, and other ones who are focusing on the finances. But it's key to have all those personnel meet and discuss all those different things in one meeting, and for that business owner to have that information so that when they are talking to the bank, they are looking to continue to grow their business, that they know those things. And it gives the bank a better understanding. Okay, this owner really knows what's going on in this business. So and then again, for those who need to start up, it's good to have that knowledge and be able to tell your story of where you want to go with your business. What kind of products and services that you want to offer to your clients. Next. How do you present your business to a bank? So this is looking on mostly at a historical basis. So for those organizations who aren't necessarily 2 to 3 years old, who are maybe 1 to 2 years old, or even less, or start up their business, when it comes to getting a loan, there's ways for a business to get a loan that we look at as an organization, that most organizations look at companies to provide in terms of their information. So financial statements, the financial presentation, as we've talked about before, accuracy of your finances, of your financials, 2 to 3 years of historical financials. We look at the business tax returns that Pam mentioned. We want to make sure that your accountant knows, hey, I want to get a loan in the future. So, sure that the next 2 to 3 years, I'm showing profitability on my tax returns. All organizations, the bank will look at their tax returns in addition to their business financial statements. Now, most tax returns are on the cash basis, which is fine. And then the statements, the financial statements are on accrual basis. So we'll look at both. If it comes to where you have a review, a CPA review or a CPA audit, we'll look more heavily on the CPA review or audit rather than the business tax returns, because those are going to be accrual statements. They're going to follow the GAAP, method in terms of, and so the bank will look at that specifically. We will also look at your interim. Today we are doing a lot of virtual learning, a lot of virtual meetings, networking, everything like that. Why is that? That's because of COVID. So now we want to look at your interim financials more so than ever in that regard. So your personal financial statement, make sure that you use the bank's personal financial statement, fill it out, or if you have one, that essentially is your personal balance sheet on you specifically. How to present your continued, so if you want to go to the next slide, company background, have a summary of what your company does, what are your products and services that you sell, what makes you different, as we talked about before, what makes you different from your competitors, how you plan to grow and continue to grow. That's that forecasting, that's that budget that you have, being able to explain your budget, what factors affect your business, and what are you doing to take advantage of the opportunity to reduce the possible risk. So in other words, some organizations are doing really well off of what's going on right now in the economy. Online sales are going through the roof for organizations that have a really good online platform. So how do you continue to drive that success in current economic times? Other organizations that aren't doing so well at this time, and they're having to manage their costs. So what is it that you're doing to manage your costs? What is it that you're doing to innovate yourself in order to continue to make sure that your organization is a going concern? Management. Who runs the day-to-day operations? Who is it that is in the weeds, making sure that the business is, running well, a well-oiled machine? Who manages the books? Who's your bookkeeper? Is it your CPA? Is it, somebody within your organization that keeps the books, husband, wife, whatever it may be? Who runs the sales of the company? Are you the main salesperson, or do you have a specific manager that runs the sales? And what is it that they do? What's their expertise, in that regard? Qualifications of each person. That's key. What's their background? What's their bio? It's good to have bios on hand so that when you want to present your business to a bank, you have those bios in place. Next slide, getting the proper advocates for your business. And maybe Veronica or Pam, you can talk a little bit more about that. Who is your relationship manager? Do you know who to call when you need something from your bank? Does that person know about your business? Have you had a lot of dialogue with them? Do they know what's coming up with your business in terms of what you plan on doing? Do you want to buy a specific piece of equipment sometime in the future? Or, are there working capital needs? And what I mean by working capital is, are you going to need a line of credit? Are you going to need some business credit cards or whatever it may be for that specific thing that you want to do to grow your business? Like I said, do you talk to your banker on a regular basis? It is important that you have that advocate in your business, because truly they can look at your financials, they can ask you the right questions, they can say, hey, this is a good company, I have a good feeling about this company because X, Y, and Z. Here's what they've given me. I've got these additional questions that I want to ask them. I want to go back to them, and some things where it may have been a possible, decline where it ends up being an approval because of the additional information that was provided by the banker who's knowledgeable about your organization is able to advocate your story. Anything you want to add, Veronica?
Yeah. So again, just kind of like what you were mentioning before, when we sit with our new clients, that's the big introduction. We have a lot of questions, but it's just so that we can make sure we understand more about your business, see what types of transactions you're going to be doing, what types of checks you may be receiving, and the amounts that those are. When you start a new relationship, a new banking relationship, a lot of the times the business owner, the new customer is, well, you guys are going to place holds on my funds, or you're going to, you're unfamiliar with it. Well, that's why we ask, so that we know what to expect. So then if we are able to release funds sooner or make those exceptions, it's because we're understanding what type of activities your business is doing. And we were aware of the types of, a large purchase or a large sale that was going to be done, so that we were aware of it. So having that dialogue with, your banker, your branch manager, keeping that open communication going. Hey, I have a new business partner that I need to add to my account, that they're going to need to be able to have access online. They'll need to be running transactions. All those things, sometimes business owners forget to tell us that. And then once they come into the branch, they need something, and it's like, well, who is this? And we're not aware of it. So just kind of really having the dialogue for understanding what is going on, how you're growing, like you said, what type of business lending you might need. And Pam, if you're still on, there's a lot of stuff. So as you start to strengthen the relationship with us, we're going to give you all the details you need to know about your account and just getting started. But then as you move forward, here's the next step. This is what we're going to need to get you, a potential line of credit, or if it's a business credit card, in the steps there. But yeah, that active dialogue is huge. And it's not because we're being nosy, but it's because we need to better understand what type of transactions, what type of activity is going to be happening, so we can then paint the picture to the next person that's going to help you with the growth of the business.
Well, what I think is important as a small business owner is that you consider all of your resources as partners in your business with you. So again, whether that's your accountant, perhaps you even have a business consultant, your banker, your attorney, all of them should be aware of what your long-term goal or objective is, so that we are kind of behind the scenes, pushing you up the hill, being a cheerleader for you. So most definitely, please do get to know your banker and have one in particular that you work with closely. And we can always be a champion for you when you are then ready for that process of putting in a loan application.
Thank you, Veronica. It is key to have that advocate for your business, and that relationship. It's important to know who your banker is, even at a branch level, or who your relationship manager is. Somebody who's seen your face on a regular basis. Understanding right now in our current situation, you can't really do that. But, there are banking centers there that you can do appointment basis, and getting to know somebody, even maybe let's just say it's at the manager level. And sometimes, in our business, at the banking centers, managers change positions, or, certain employees aren't necessarily, with the bank anymore, or they're at another organization. But it's still key to establish that relationship, because they know your business, they know where you've come from, they know where you're going, and they're able to be that advocate. And as Pam said before, they're you're part of your trusted advisor circle, part of your CPA, part of the CPA circle that you have, part of the attorney circle that you have, or even a business advisor that you may talk to, or a coach, or a person that that has another business that's mentoring you. It's good to have them to give the perspective of the bank side. And part of that's also because, our industry is changing. Our industry changed when COVID-19 happened. Our credit standards may have changed, or another organization's credit standards may have changed. So it's good for them to have that conversation with you, and they could say, well, now what I've been seeing, in regards to organizations or businesses being approved for, lines of credits or whatever it may be, here's what I've seen get approved, or whatever it is that they would say specifically for them to help you get a better understanding of what their credit culture is like. So yes, absolutely. Having an advocate for your business is very important. How a business banking relationship can help a business grow. An example here is sorry, next slide. Focus. So because they understand where the business is going, they understand what's going on with the business. They can help focus on the impact to margin and improved cash cycle. Sales to large national retailers. Is there a financing opportunity for us to, finance what we call the receivables of that organization? So they don't necessarily pay you once you give them your product. They have terms, so they'll pay you, let's just say 30 days from now. Well, that's still money going to be coming in, but you don't have that money yet. So you still need to operate your business. So maybe we can give you a line of credit that's supported by what we call those accounts receivables. Strengthen a relationship with your existing customers. Say they have a new product line that they have that they want you to create for them. And so you need financing for that. Expand your channels, continue aggressive growth with existing customers. Again, that's all part of financing opportunities. Improve production and distribution capabilities. Say that you need to, purchase some equipment, or you have a building that you're looking to, buy because your organization is expanding, and it's cheaper for you to buy it and have a loan payment rather than renting it. In that regard, and also creating equity within that building that you purchase. So, again, those are all examples of having a great relationship with your bank and making sure that they're able to provide that access to capital. Next slide. How can we help your business thrive? There are certain things within their organization when it comes to their sales cycle. There could be some challenges where, there's a new product, like I've mentioned before, foreign sales. You're looking to acquire another organization or something like that. And there's solutions that we can provide, not only in sales operations, but also finance side. Next slide. Tool for growth. Again, our banks can provide access to capital for a line of credit. Let's just say you need more than a year worth of working capital, and we're able to get you a 2-year facility rather than a 1-year facility. Improve your availability in terms of your line of credit. That's for growth. Next would be cash. Let's just say you have certain wires that you have to send out to your vendors, and you need a mode to do that, or you have coming in, or you need what we call a corporate card to make your payables. So you can extend your payables by using a credit card that we provide to you, or let's just say your merchant services. Merchant services, a lot of organizations, accept credit card. So that could be a key thing that we can provide to you. Wealth solutions, going to the next slide. Business owner advisory services that, once you've hit a certain level and you've created your own personal wealth, and you want to learn how to plan for succession planning down the road, maybe you want to sell your business, or maybe you want to pass to, a daughter or son or family member. That's something that a bank can help you with. Risk. So the next slide, fraud protection, understanding, what your risk can be when it comes to what we call interest. If rates are going to start to rise here in the future because the economy is doing better, maybe we can provide you a fixed rate loan or something similar to that will, make sure that you don't have those additional costs when rates rise. Next slide. What a business banking relationship look like? And this is the most important. You should be the center of that relationship. You should have a holistic approach when it comes to your organization. What does that mean? When it comes to service, you have a dedicated team with a single point of contact, your relationship manager, direct access to decision makers. Maybe it's a manager in the branch, or maybe it's a manager above that. Knowledge, you want to make sure that your banker is knowledgeable and that they can consult you when it comes to your business and provide customized solutions. And then the experience, understands the bank's culture and can explain it to you, and is experiencing and knowing what the bank's process is. If they don't know what the process is, then they can't help you out throughout the whole process from start to finish when it comes to either getting a loan, providing other services that the bank offers. So that's essentially it. Sorry, I know I went a little bit long. Hopefully this is some good information for you guys. I guess we have a few more minutes for questions. So go ahead and open it up for questions.
Great. Thank you so much, Sergio. I know this was a lot of valuable information. We have just like 5 minutes or so for questions. You could either put it in the chat, or if you're brave enough, you could also feel free to unmute yourself. Now's the time to do so. And maybe Sergio or anyone from the Comerica team, I know as we wait for questions, maybe if you want to just give just a general recap of, what Comerica could also offer small business owners as well.
Themselves. As I made in the presentation, when it comes to a banking relationship, we do offer a holistic view when it comes to a relationship. Whether it's at our banking centers, or whether it's through Pam or Veronica, we offer a holistic view. We have I guess you could say what we call collaboration is more of an internal thing. And we want to make sure when it comes to a client that they are given the right products and services, that they have somebody who is an advocate for their organization at the right level. So if it's, more of a smaller organization, something that's looking to start up their business, that would be Veronica, who would be an advocate for them. If it's a business that's already established, let's say 2 or 3 years, sales size, or up to maybe $5 million in revenue size, that would definitely be Pam. And Pam, maybe you can elaborate on that in terms of the sales size, maybe higher than that. And then on top of that, we have our other business bankers who work with organizations that go up to about 20 to 30 million in revenue size, and they're the advocate for that. And then where I come in is your 30 million to 500 million in revenue size, and work with organizations that are of that size. But I've worked with organizations of your million to 20 million, and your 20 million to 50 million, and now your 30 million to 500 million. So over the 15 years that I've been doing this, I've worked with all sizes of organizations, and no matter what the size of organization it is, or even a startup, we will advocate for your business. We will help you. We will give you advice when it comes to our banking services that we can offer and provide for you. The thing that I do specifically is, or what makes me happy, and
what makes me love to do what I do best on a daily basis is because I like to see my business owners succeed. I like them to grow their organization to where they're eventually going to sell it and have wealth from it. I had an organization that I worked with when I first met her. She was $6 million in annual revenues. She was starting up. She was a business owner, and she grew to about 100 million in sales. A couple years ago, she said, "Hey, I'm looking to retire. I want to sell my business." So I got her in contact with a few organizations, and she interviewed each of the organizations. And finally, she chose an organization that to represent her in terms of selling her business. And she sold it for what she was asking in terms of her asking price, and now she's going to be able to retire. She's staying on for a couple of years, but now she's fulfilling her dream. And to me, that's success. That I helped an organization like that grow from a small organization to a larger organization, and now it generated wealth for them, retirement. So, and I think that's what business owners look forward to, is eventually either passing the business down to their family members or friends or whoever, and then creating wealth.
Sergio, it's Pam.
Yeah.
I was just going to add a little bit to your story. If anyone out there is not aware of Comerica Bank, we are a 170-year-old bank and founded for business owners. That's how we got our start. That's who we love helping. My lines of credit start as small as 10,000. So you can imagine that would be a company doing small gross sales. I do lines of credit up to 500,000. So companies doing upwards to 5 million in gross sales. But the other point I wanted to make was, yes, I do need 2 years of tax returns typically. And to your point, Sergio, just a very small story of the passion that we get doing what we're doing. It was last year. This to me was the most exciting loan I gave all of last year. It was a small restaurant owner here in town. And actually it was out of V's branch, and he needed a line of credit. He wanted to buy some equipment, and he had met with a large commercial bank in town, and they turned him down. So I met with him in person. We did some paperwork together, and then I needed a few things from him, and he kept putting me off and never got them to me. And finally, when we connected, I said, I just need these last few items. Is there a reason why I can't get these? And he said, well, hey, the big bank turned me down, so I'm just going to assume that you guys are too. And I kind of talked him through why I didn't think that was being fair. He wasn't giving Comerica a chance. And lo and behold, we got him a line of credit for around 30,000, an equipment loan for around 35. So again, I'm talking small, but the impact that is going to make on that business owner's life was life-changing. And it was just thrilling, so exciting for me to do that. So we want to help. We're here to help the small business. Don't just think that we're a big company lender or anything like that. We are community banking.
I think we're out of time. We're a little bit over, actually. So thank you for joining us.
Yeah, no, we really appreciate it, and we'll send out Sergio's information on our post-event email. So if you have any last-minute questions, I don't think we've received any others, you could feel free to directly contact him and the rest of the Comerica team. But on behalf of the chamber, we thank you, Sergio and Steve, Summer, Veronica, and Pam for helping us out with today's webinar and continued support of our business bootcamp series. We'll have one next month, and we'll share more details in a couple more days or so. But if you are planning on sticking around for our new member orientation, just give us at least 2-3 minutes here to set up, but just sit back, relax, and just make sure to join us. But this officially concludes the presentation today. And again, thank you so much.
Thank you.